So today is on a weekend and the markets are closed. So I decided let me just show you one of my strategy that I use to trade. In this strategy, we use Fractal. That is market structure in higher time frame and market structure in lower time frame. Like what we have is in fractals, what you do on a higher time frame is what you do on a lower time frame to confirm your trade. So to be quick on it, you should know that the market structure is in three formats, where the market is moving in higher highs and higher lows. That is market being bullish. And another scenario where the market is moving, making lower lows and lower highs. That means the market is bearish, right? And another scenario where the market is just not trending in any direction. It's in a indecision form, or it's in a range. The market is not trending in any direction. It's consolidating, right? So these are the market structure, all right? We need also to know about the key levels, the 00, where we have the 00, where we have the 250, where we have the 500, and then the 750. Okay, so these are the key areas where I usually draw my lines of support and resistance. All right, so now with that in mind, let's have this cleared and come here. We will start with higher time frame. So, and on higher time frame, we usually look for buyers on daily. That is market structure. This can be daily or 4 hours, where we look for biasness, and biasness means the market structure. This means we are looking for either if the market is bearish or bullish, right? So having that in mind, this will be our first step. We find if the market is bullish or bearish. Okay, and we come in here, we just find the swing highs and swing lows. You don't have to overthink it. These are the swing highs. This is the highest point, so this will be our swing high, and our swing low here, right? Yes, you can take this point here. Okay, but you don't have to go this far, so we can also pick these points as swing lows. Okay, but the actual swing low is here, right? But remember this, it's daily, meaning every candle here is moving daily. Okay, this candle here represents 1 day. Okay, and so now we are here, we need to look for market structure, where the market is currently is. So this being the swing high, or if you want to get it further, you can look to the left and see where the market broke structure. So we can have at this point here, all right, this point right here. This is where we have the break of structure. Okay, meaning if the market goes beyond these points, the market will change the direction. So you can see that the market is now forming the higher highs and higher lows. This is higher high, this is okay, we don't have to go this is too much far, so we just retain this position here. So you can see this is where the market broke structure. We have the candle breaking above this high, and we have this swing low. So this means our market is bullish. Okay, but this is the far end. So bringing it more closer, you know, we need to trade with the current time where the market is, right? We can see that the market was trending down. Okay, we have higher highs and higher lows, higher lows, higher high, higher lows, higher highs, higher lows, higher highs. So let us mark this point here. Okay, you can mark this point here as the break of structure to the low point, or to the lower low. This is the break of structure. So if the market comes to this point here, this high, that means the market will have changed its direction from bearish to bullish. Okay, and remember the overall trend is a bullish trend. So here we have a break of structure, a change of character, since the market has moved above this swing high, which was our lower high. Okay, now what you have to do is we need to monitor the market. So that is, if the market comes to this point and breaks this low, it will have changed from this minimal uptrend to a downtrend, right? So we're gonna be watching for that. So you can see that when the market came to this swing low here, okay, it's a weak, the candles did not close below it. So this means that our point is still valid. Okay, so we have now to come here and plot our key levels. Okay, the key levels that we say, the 250, the 00, the 500, the 750. So we'll take our horizontal line and place it somewhere here. You right click it and you can see it is actually at 750. So we are looking at this last point here. Okay, that is 750. We can have it at somewhere at 500. Let us just plot of them so that we see here we have our support areas. Okay, that is 500. So we can have another one at 250. The other one at 00, of course. Okay, this will be I think it is too far. I don't know, let's say 000. That is too far. We need to bring it somewhere here. Okay, yeah, at 200, 2000. Okay, so these will be our support areas. Okay, but you don't have to look at all these areas here. We need to check where the market is currently at. So we are at this point, and now we can have this circular thing here to mark that level. So meaning the price has already hit our support. So if we move to 4 hours time frame, you can see where we are. Okay, and this is the point where now the fractals are going to come in. We are going to scale down until to 15 minutes. Okay, and you can see how it really looks like. So okay, we are here. You can see the market came, touched our levels. This is for intraday, don't forget. And let's now mark our fractals which we are having there. That is the market structure. So this will be a break of structure. So if the market is going to go above this level and close above it, that will be a change of character. Then if it's going to close below this swing low here, remember the 15 minutes are for confirmation. Now we are confirming our level so that we can see if we can get into the market. Okay, if the market closes below this, that means it's okay. We are expecting it to come, not close above this, but to continue moving down. It's a downtrend. But if it's going to close above this swing high here, that will change the direction to bullish. And that you can see that the market came and closed above this level here. Okay, so we can have this as a change of character. That is our change of character. And then now what we are going to look out for, we are going to look out for, since this market is bullish, and let me write it here, bullish. So that means we are looking for buys. Okay, actually we would have written this when we were in a higher time frame, but it's still fine. So what does this tell you? We are waiting for market at a certain key level. The key level could be this level here. Okay, and this level could be this will be our demand zone. And if the market come up to this level, we are going to go in a long position and set our stops exactly below this key level, okay, at that place. And then we can target the previous high. So this is where we are going to enter. And one thing you can see that we have this pullback here. So this valid pullback, that means below this level here we have a lot of liquidity. We have a lot of stops here, we have a lot of buys, we have a lot of, for those who sold here can close here. So there's a lot of liquidity, and this now can act as an inducement, okay? So these are advanced concepts. If you want them, you can follow me on my channel, and then we're gonna be discussing them. So this is an inducement. We are not going to enter here. We are going to wait for market at this level, and then we can enter from here. And now since the market is in an uptrend, okay, let's enlarge this a little bit. We are going back to our 4 hours or daily and try to predict where this market is going to go, or the levels it's going to reach. So we can see we have this one level here, and if you want to go more crazy on this, you can, this is crazy actually, you can set your target to this level. This is so big, this is so high, but it might work. If it crosses this level, we can set this point here to be, this is our TP1. Can this have as a TP1 at that key level? We can have this as TP2, can have this as TP3, and then you can close the purchase at around this place, and then bring your stops or trail them up so that you can capitalize on this clean move here, okay? And you can see, if you want, you can bring them up to this level, but we don't want to do that. It might come back on us. And you can see we have a risk reward of 1:23 here. So if you're risking $1, you're going to get $23. If you're risking $1,000, you're going to get $23,000. Wow. This is crazy. All right, so moving back to our 15-minute time frame, we are going to run this and see how it's going to play out. You see, if you go, we are going to be tapped in. Yes, and we are already in the move, right? And we were tapped in exactly at this point where we'll set our zone, okay? So, and now we let the market play out to see how it is going to act, right? It's coming to our entry, but finally it pushes up, okay? The market's here running on our area. Okay, you can see it's crazy moving. Actually, this could be a very clean setup. So we already have taken our first TP. This is TP2 here, TP3 hit, and now we are heading to our full take profit. All right, so let's wait and see how this one is going to play. So you can move to 1 hour to make it run a bit quicker. TP1 hit, TP2 hit, TP3 hit, and now we are waiting for it at full take profit. All right, and almost to our TP, and boom, that is our actual setup. So follow me for more.